Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 29th of August. All right, now, surprisingly, as we come into trading on Wednesday, now the currencies haven't done a hell of a lot. Okay, they've had a bit of a move higher, dollar weakness, and then pretty much sort of started to trade sideways. And this is very surprising to me, primarily because if you have a look at the US numbers, and I'll just do that in a second, you can see all these currencies now sort of just jamming away. The dollar CAD's got NAFTA issues, it's got oil moving about, as well as the overall US dollar picture. So that's a little bit more tricky. But you're looking at these currencies, you're thinking, well, everything's business as usual. But to me, it's totally not. And this is where you do your analysis. You have a look at your charts, you sort of see what's going on, and then you want to fill the picture in as to why it's either trading sideways or why it's not. And the easiest way to do that is to come into the previous day's economic numbers, especially the US market. Now, one of the key numbers coming out this week was the US consumer confidence numbers. Now, check out these numbers. These are, to me, through the roof. Normal market conditions with nothing else going on. You've got a slight revision higher here in the previous number as well. The US dollar rallies and, set sail. It should be rallying very strong. And then you come back and go, okay, so the US dollar should be a lot higher. You come back to your major currency pairs. This is a good way to have a bit of a cross-check. And you look at your charts and you think, well, okay, yeah, the US dollar rallied, but look at how small the rally was, and it's giving back its gains already. All right, so to me, this is not good. So you've got to go and find out what's going on. If I just come across and show you the US dollar before I do that, okay, so you're looking at the dollar, thinking, well, what's going on? If anything, the US dollar has rallied slightly, and now it's just stalling. Like there's a question mark over here. Something's holding it back. The dollar yuan or dollar China just trading sideways at this point after the PBOC have scared off a lot of traders with that big purchasing of or selling of US dollars, buying yuan. Okay, that's sort of slowed things down there, and that was their objective too. Push this thing down, take out all the people who are long dollar China, and now everyone's licking their wounds as it starts to sort of come back. I think overall, I mean, the only thing the tariffs will do is push the value of the yuan down. So that's going to come back at some stage. You just don't know when. All right, so that's what the US dollar is doing. It's not doing a hell of a lot. You come over here to the general news pages, right? And you can sort of usually find out what's going through here. Obviously, Trump, he doesn't like people playing with his toys, so he's questioning Google over why all his bad stuff comes up first. It's because he's an idiot, but that's hilarious. Now, investors wait trade news. Okay, so they're waiting news on the China-US situation. There's there's other things in play as well with OPEC. And also NAFTA with Canada. So there's a few things going through, but nothing really here to explain what the hell's going on with the dollar. Why isn't the dollar rallying? Now, I was just telling you to flick through because it's like this is one of the things that really gets me, I wouldn't necessarily say overly excited, but I'm inquisitive as to what's going through the market. Now, if you scroll through your news, it'll become obvious that there's one key thing that's happening behind the scenes, and it's on the US Treasury yields. And the yield curve is flattening. Hopefully I can find the where this is. I saw it there before. Basically, where is it? I'll come back to that. Where's my US page? I'll have a look here at the. This is basically a US page that I've changed to just US news, so I can actually just decipher what's going on that's going to impact the US market. Now, if I don't find it here in a second, can't see it there. So basically, what we're looking for is basically, if I come over here to the US Treasuries, right? Now, there's a lot of talk, and this is apparently, I think this is going to become a really big story because if you look at the yields, okay, you got the US and the 10-year here. The 2-year is the orange, and the which is at 2.66, and the US 10 years 2.87%. So these yield curves are starting to flatten, right? It's very hard to see when you put on the charts the the two bonds there themselves, because the yield curve actually takes into consideration the short-term and the long-term instruments. Now, when they're talking about a yield curve flattening or inverting, what they're talking about is an interest rate environment where the long-term debt instruments, okay, have a lower yield than the short-term debt instruments of the same credit quality. That's why you're looking at the US, yield curve overall, because if you look at the data, we've got 1 month, 3 months, 6 month, 1 year, right through to 30 year. Okay, that's the yield curve itself, and you can see how this thing is starting to flatten. Now, apparently out in the US, there are CTAs and fund managers just getting absolutely hammered on this. Okay, they thought it would be steepening. With the interest rate cycle that the Fed has been on, you would expect long-term yields to be much higher, but they aren't. And they're starting to flatten, and that generally means, okay, it's considered to be a major predictor of economic recession. And they are starting to now talk about, over the last 45 years, it's happened every time. If the yield curve inverts, where obviously the back end of the curve here is lower than the front end, well, that's when recession really happens. And over the last 45 years, that has been a precursor to an upcoming recession. Now, I think I can see it's flattening, of course, but is this really happening? Well, I think it's more of this is a different market to what it has been previously. Okay, now there's a few companies out of the US, especially out of San Fran. If I can just find this article, it'll be quite interesting, that have actually come through and said basically there's nothing in the data that suggests it's no different to any other time. But to me, Trump has actually caused a lot of the issues with everything else that's going on. I think we're in a different sort of economic frame of mind. So it's going to be quite interesting to see how this plays out. I don't think I can actually find that, which is a bit of a shame. So what we're looking for is basically a situation where we've got to keep an eye on this, because if that sort of inverts, and that's, as I said, this yield curve, an inverted yield curve, so it's got a bit of a way to go yet, would suggest the US is going to go into recession. Now, it doesn't look like it to me as far as the numbers go. Consumer confidence numbers are through the roof, but this would go a long way to explaining why the US dollar didn't rally that far yesterday, because there's a lot of people concerned about it. Okay, and it's starting to get into the media, mainstream media. It's starting to get into the Fed, into the eyes of the Fed and everyone else. So there's a huge situation where all the fund managers in the US are getting hammered on this. Okay, they're back for a steeper curve, and everyone's in the negative. So it's going to be quite interesting to see how it plays out. Recession, I can't really see it myself at this point in time, but stranger things have happened, and that's probably one of the key reasons why the US dollar has not rallied. And then you come back to look at the major currency pairs and you think, well, what's going on here? Well, you know what? There's a big play here in the US Treasuries, which is suggesting that the US market is slowing down, and that may see all these currency pairs kick to the top side. And the way it's reacted after those really strong US consumer confidence numbers suggests to me that this is on the card. So, it's a long way from coming into it and being a critical issue at this point. We would see dollar-yen lower. Now, sterling, Brexit, everything else that's going on, it's just doing its own thing against the general mainstream correlations. But that's something to keep an eye on as we go forward as well. So, overall, it's something to keep in the back of your mind. Why is the dollar not rallying? This could be one of the major events. And as we go forward, you really need to be paying close attention to it, because it could be a catalyst for something big. So you come back to looking at the MyFX Trading Hub. Okay, now we get focused on the next major event. And this is going to be a really good situation. If we get, say, strong US prelim GDP numbers and the US dollar doesn't rally, well, this thing is in play, and you need to get prepared for it, because the markets will move with that yield curve. And basically what can happen is, because everyone's looking at the yield curve and it flattening, it can actually cause the event to happen. So geopolitics, yeah, it's still lingering in the market at this point in time. There's no key data yet to really shake things up. We start to get into the key numbers, today with the US prelim GDP numbers, and then you've got some important Kiwi numbers, Aussie, Canada, and then you come down to some really important PCE data out of the US as well. So we need to sort of wait and see what's going on there, and we do have some key events. Now, we've got 10 hours before that next major event. Now, also with the, the way the markets reacted yesterday, there's no change to me in the overall sentiment here of these major pairs. Bullish still for Euro, bullish, well, technically or fundamentally, Sterling has got a bullish tone, but it's just trading sideways technically. So to me, there's still room for an up move. We'll have to wait and see how that plays out. Bearish for dollar CAD and bearish for dollar Swiss. Now, out of all of these, as you can see, just a little bit below here, I've got a technical setup, technical trade. I can see a really nice trade here on dollar Swiss. Okay. And this is one of those ones where dollar Swiss, it's a neutral, you just treat it like a neutral currency. It's almost like dollar yen. But the Swiss is completely neutral because they've got a small economy, nothing really changes, and the US dollar movement really is reflected in dollar Swiss. And just to sort of show you what I'm talking about, if you come over here, for those members who've got full access, you come down into the full daily analysis summary. Now, you've got the central bank, they are generally neutral. The data for the Swiss is generally neutral. The technical outlook is down, and I've got a sentiment as bearish. If you come down and have a look at the overall technical framework for dollar Swiss, okay, it's uniformly going down on the weekly, daily, and hourly charts. This is where you can often see where the US dollar movement is coming from before it hits the rest of the majors. Now, I know that a lot of the majors have already sort of rallied somewhat against the US dollar, but this currency pair here is telling me it is rocking and rolling and falling. So when I come back looking at the, the dollar index itself, okay, if anything, to me, it's now on the back foot, and I'm looking to start selling on rallies, and that's, to me, where the cash is going to be. Overall, right now, we still have 2 interest rate hikes from the Fed coming up. They've already been factored into the market. The Fed have, if anything, gone to already a neutral stance, and that is like a dovish. When you come from a hiking situation to neutral, it's the same impact as like going dovish. So the US dollar is losing a lot of people are losing a lot of faith here in the dollar, and I think it's time that when you start looking at the US yield curve, this is only going to fuel the fire for more dollar weakness. Now, so this is going to be a tricky situation as we move forward because, we've got all these economic numbers. There's, the yield curve really hasn't fully impacted all the currency pairs yet, but it could come into play. And we've got also, at the same time, we've got a whole heap of geopolitical situations sort of brewing at the same time. So when you look at the market, it's not exactly plain sailing because we've got geopolitical events. We've got a shift in one of the major financial sectors, the US yields, and then you've got China, Iran, oil, NAFTA, Brexit. There's a whole heap of other stuff to focus on, and that's why I've come back to dollar Swiss just for a straight up technical trade, and that's where I think the cash is going to be. Now, don't forget, once again, as I said, when I come back to the MyFX Trading Hub, we've got a really good couple of numbers coming out of the States, which will confirm exactly what I'm talking about or not. Okay, US prelim GDP numbers. Now, if these numbers are reasonably strong and or stronger, and US dollar doesn't rally, well, it's time to start selling. Okay, it's as simple as that because this other the US Treasury yields, and you know how the bond market can take over everything. Well, that's where I think we're heading towards. It's a bit of a meltdown in the US dollar. I don't think they're really going for a recession, but we may see that yield curve flatten as the market starts to talk about it. I think it'll be a bit of a precursor to the whole thing happening. So from here on in, it's Wednesday. This is the real start of the trading week. All right. So if you've been banging away unsuccessfully, well, just relax because by Wednesday, okay, the markets have had time to sort of sort themselves out. The geopolitical issues, if I can say it properly, have had time to sort of come out, be factored into the market, and now we have a lot more structure into the major currency pairs themselves. So we've got pretty good setups. All right, all we need is the data. So the main thing about looking at the major pairs at the moment, we've got some levels here on most of these currencies. Just be aware, if we do get strong US GDP numbers, then we may not really get the move you're expecting. Okay, so may not jump in straight away. You want to see how this plays out. All right, guys, that's it from me. Plenty in there. You know, the US Treasury yields, when you bring bonds into it, there's a lot more to understand, of course. If you have any questions, jump in the live trade zone and I'll be happy to help you out. It's understanding all this, all the crossover financial market stuff. All right, guys, have a great day. I'll see you in the trade zone. All the very best. Cheerio.